At the peak of the market in July, we were up, about 15% for the market for the year. We're now up about 10. Remember back in June, we wrote that, expect a 5 to 10% correction because that's completely normal with any given year. As of Friday, we completed a 10% correction. Here's what you need to know before the bell this morning. The market sold off last week, and again, we took out that 200-day moving average, and we talked about that last week. They said, hey, if we take that out, there's certainly some risk to the downside. Well, we did take that out. Remember, we talked about this, given this time for a confirmed break, and we had that initial break, a rally back above the 200-day moving average, and then fell back below it, broke it. That was your confirmed break, and then following that, you had 3 straight days of down in the markets, and pretty significant sell-off as well, bringing the markets back to really this kind of cluster of support that we had back in May of this year. So again, we basically took out this whole kind of advance that we had following kind of this March bottom. We kind of consolidated along the whole month of April and May. Market really just didn't go anywhere. Then we broke out of that consolidation, and all we've done now is just give all that gain back. So at the peak of the market in July, we were up, about 15% for the market for the year. We're now up about 10, giving up that. We remember back in June, we wrote that, expect a 5 to 10% correction because that's completely normal with any given year. As of Friday, we completed a 10% correction. So everything that is normal within a market environment, especially in the year where the market was up 15% for the year already, that's a very big run for a market in 6 months of the year. So giving some of that back, certainly not surprising. And that's exactly what has happened so far. So again, nothing terribly bearish here, right? Just markets kind of gyrating and working the way they normally do. We got extremely overbought. We're now extremely oversold. So the opposite now sets up here to, as we talked about, having this kind of reflexive rally. Market's up a little bit this morning, but I wouldn't expect a lot out of the market until we get past the Fed meeting on Wednesday. They're most likely going to keep things on hold here and probably signal that they're going to keep things on hold in terms of interest rate hikes even in December when their next meeting comes up. So, there's probably not a lot of risk here in terms of, the Fed hiking rates between now and year end, unless we have some type of scorching inflationary number that comes in from somewhere or some other, kind of geopolitical event happens that really puts pressure on the overall environment. But outside of that, the market, is under pressure here, no doubt, but very oversold. So be careful selling here, as generally we're getting kind of to that level. We've got support, previous support. We're oversold, and so likely you're going to get a bit of a reflexive rally here. Use that rally to sell into, to reduce your risk, raise some cash, do what you need to do to kind of get your portfolio in a position as we approach year end. Once we get to January, February, March of next year, we'll have some other analysis. We'll have to figure out kind of where we're going to there, and particularly as we get into potentially a much weaker economic environment in 2024. So again, just kind of pay attention to things here. Not a lot going on here over the weekend. Again, we're wrapping up earnings this week. By the end of this week, we'll have almost 80% of the S&P have reported. Apple is the big report this week, but a lot of big companies reporting earnings all week. That is going to move the market. We've been punishing companies that miss earnings, but not really rewarding them if they beat earnings. So this has been a real tenuous type earnings season so far, but earnings will be the focus this week for the markets, and of course the Fed meeting on Wednesday. That's what you need to know before the bell this morning.